Good afternoon. Happy Thursday. Lot to cover here. We got big tech earnings kicking off this week, kind of continuing down this earnings theme. A lot of market fluctuations along the way. And our question of the week is a great one, all about alternative investing. What is it? What does it do? What does that mean? My name is Brandon Steele. I'm a financial advisor here with Mainsail Financial Group in Bellevue. And our goal every Thursday at 3 is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a little bit of the noise along the way. Again, this week is going to be a continuation really heavily about earnings. We've got all the big players, Microsoft, Google, Apple, Amazon, all these guys reporting this week. So we will get into that here in a minute. But before I jump into the meat of today, I want to back up and start with Tuesday. We saw consumer confidence numbers come out at 107.3. Not a big deal. It was down less than expected. But I think what is important to note is to continue to watch this. Obviously, with the war continuing on, with inflation continuing to show strong signs of growing, we're starting to see the impact on consumers, I think, a little bit. And so we will continue to watch that. In fact, I think Biden asked for some money today for the war. Like, there's some things going on that show that these things may still continue. We had new home sales come out down to 763,000. So I think kind of a continuation of what we talked about last week as we see these higher interest rates, it's maybe starting to impact home sales to some degree. And especially here we are in April as we move into the spring and summer months where home sales are generally, this kind of the season. It'll be very important to watch what happens here. Today on Thursday, we had initial jobless claims come out at 180,000. But maybe more importantly, we had GDP numbers come out, the first revision, at down 1.4%. Expectations were a growth of 1%, and we were actually negative. So this is big. This is important to pay attention to. I mean, really, the market's kind of shrugged it off so far, but this is something to really keep a close eye on. We've talked before about this idea of stagflation, where if inflation continues at the rate it's going, but GDP or growth either slows or pulls back, that's a challenge. And so obviously, one quarter isn't necessarily enough to be super concerned about, but it is something to watch for sure. All right, all that said, let's get to the main event, which is earnings. So again, we had all the players. We had Microsoft, Google, Apple, Amazon. We had Netflix last week. I'm sure there are more mixed in there as well, but my head's kind of spinning at this point. All the big tech earnings came out this week. And there's been a lot of market reaction, I think, primarily driven from that. On Friday, we saw a big down day. Coming into Monday this week, we saw really negative to start, but actually picked up by the close. Tuesday was a big down day. Wednesday couldn't really find a price, kind of, almost flat at the end of the day. And on Thursday here so far, up slightly. So we'll see where we land. But it's been a lot of up and down, a lot of back and forth, and a lot of the media has been talking about the impact of earnings on this. The truth is, though, earnings have been pretty good. I think it's something over 80% of companies have beat on their earnings expectations. Now, how much they have beaten is kind of a factor into this as well, and the earnings growth rate, right? So keep that in mind that there is more under the surface, but generally speaking, earnings have been pretty good so far this season. On top of that, I know Microsoft was good. Google was not so great, although earnings to some degree were okay. There was a little disappointment on the YouTube side of it. Apple and Amazon, we will see this afternoon. But, what you have seen, I think very clearly in this last month is that big tech has gotten hit the hardest, really, of a lot of the sectors. And so earnings are obviously really important this week for those companies because, a lot of them are down significantly just in this month of April. So this will be important to watch. Next week, we'll kind of continue down this earnings theme and break down any updates there as well. But as we get into that, we've got so much to cover next week. We got inflation, spending, income, plus here we come with the Fed on top of all this. So not only do we have this earnings consideration, but we've got the Fed coming and possibly very likely to see a bit bigger of a shift in interest rates than we have in the past. So get ready, join us definitely next week. We're gonna have a ton to break down, but before we get too far ahead of ourselves, I want to address the question of the week this week, which is really relevant given what we just talked about today. And the question is, what are alternative investments? And I will start with a very broad definition that generally alternative investments are anything outside of the traditional stocks and bonds. So that could be something like art, for instance, could be an alternative investment. Real estate might be an alternative investment. Commodities are a good example of alternative investments. So it's a broad world, but generally speaking, it's something outside of stocks and bonds. And generally, the idea behind an alternative investment is that they're not correlated to stocks and bonds. So in other words, they don't move in lockstep up or down just because stocks are moving up and or down. This year is a great example, right? If you look at from January to today, here we are end of April, stocks are down, let's call it 10% or so, depending on which index and where you're looking, but let's just call it 10%. Whereas alternatives and especially commodities are actually up. Some real estate values are up, definitely commodities. If you look at like wheat, oil, some metals, like a lot of those areas are up and up quite a bit. So that is the whole idea of alternatives, is that it is a piece of your portfolio that, especially if used at the right times, are meant to take a little bit of the fluctuations out and hopefully give you some opportunity when maybe the stock market isn't doing it for you, right? Now, the challenge sometimes with alternatives is, of course, liquidity, right? If you own only properties, for instance, only real estate, hard real estate, and you have a major medical bill come up, it's a little harder to shave off a piece of that roof to handle that bill. That said, there's a lot of investment options for alternatives these days, whether it's ETFs or funds or whatever the case might be, that do provide some of that liquidity. But generally speaking, that is the benefit of alternatives. Sometimes, it's not that they always need to be in a portfolio, but especially in periods of volatility, they could be a good consideration or addition to what you've already got. So hopefully that's helpful. Again, let us know if you have any questions of the week. We are more than happy to cover them, and get ready because next week we have a ton to cover, again, with not only the Fed, which will be the main show, but inflation and spending as well. Have a great upcoming weekend. We will see you next Thursday at 3 p.m.